welcome back, and joining me for a closer look at what's played out on the market scene today is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. I'm confused about the impact of the Middle East tension on the markets. On one hand, you do have the narrative that the markets are unfazed by the latest escalation in the Middle East because it might be short-lived. But on the other hand, there are jitters creeping in certain areas of the market. How are you reading the situation?
And you are right, Friday when it happened, we did have a reaction. But yesterday when we were closed, guys were thinking, yeah, this will be contained. But I think for Trump to leave earlier, and as much as he said it's not going to negotiate a ceasefire, he's got bigger and better things to concentrate on. But remember, this is the guy who the very same sentence or paragraph continued to warn, Iran itself. And also there is this anticipation when it comes to the interest rates tomorrow of the US. But we've seen, and there's this unconfirmed reports that Iran is looking for a ceasefire, and seemingly it's not, because even if we're talking today, the guys continue to exchange bombs. So I think reality is starting to kick in that, yes, that was more of wishful thinking yesterday that, yeah, this thing will be contained. But as it stands now, there's no sign of any ceasefire of some sort. And we know the importance, not just of those countries, but this whole thing, about that Strait of Hormuz, we keep on talking about oil passing there, 20% thereof, but there are other goods, that has to pass through that Strait of Hormuz. And we know that it did got to be affected at some point. So I think this whole thing of the mentality of buying the dip, it has worked to some extent this year. And yes, after the negative news were fading, we got to be rewarded. But this time around, I think market participants are more reluctant to be able to go with that mentality of just buying the dip.
Yeah, so many things are happening. Of course, so many threats to economic growth as well. And obviously, when there's a threat to economic growth, it also speaks to consumer demand. And talking about consumer demand, we did get retail sales for May coming out of the US today, and actually seeing them surprising to the downside with the decline more than what investors had anticipated. Just talk to me about, just the insight that piece of data gave into the health of the US consumer.
Number one, it's a back-to-back decline because April were down 0.1%. Retail sales are important, not just in the US, but even back home here, because the US, just like most developed economies, is over 60% driven by consumer demand. Then retail sales is a very good indicator when it comes to consumer demand. And yes, it's not surprising that we've seen this number, all because people were front buying, because people were worried about the tariffs, especially when it comes to auto, stuff like that. As much as there was like a pause for some few days, but people are still worried that Donald Trump will continue to impose tariffs, especially on the likes of what you call this auto vehicles. And now restaurants as well, sales were down, and all because people are trying to be extra cautious when it comes to their finances. So it's all at the back of people are worried about this whole thing of tariffs, because no one can really tell exactly what would be the impact, going forward. But yeah, it's more of that people are less front buy, front loading, whatever you want to call it.
Yeah. Well, Vukile benefiting from a consumer that continues to buy at its shopping centers and malls in South Africa, Spain, and Portugal. Of course, we did have them releasing their annual results, that growth momentum continuing, and them having a positive outlook. How did you digest those results?
Very good set of results. Back home here, you look at the exposure of their malls, it's more exposed to the middle to lower LSM. And we know that most of those people, they don't do online shopping. They still prefer to go to the malls themselves. Yes, we know 35%, of their properties in South Africa, 65% in Spain and Portugal. But look at the occupancy, when it comes to Portugal, as you said, intro, sitting at almost 98.4%. Very impressive. As a retail, vacancies, lowered to almost 1.7%. Yes, revenue up 9%, increased their dividends by 6%, and you look into the profit as headline earnings per share, not too shabby at 20.
All right. Well, another property company, another retail storage, also coming out with its year-end results. Of course, also based in different regions. The company characterizing the results as strong, and actually, the South African portfolio really showing off there. Your take on that performance?
Benefiting from immigration, immigration, people will continue to use their facilities. Yes, we know they've got almost 108 properties, I think 63 or so in South Africa, 45 in the UK, but the demand continues to be strong. I mean, the guys are saving over 55,000 customers. For me,
Wow.
that's very impressive, Yes, you look into the property portfolio, sitting at almost 18.5 billion, revenue up just a mere 7%. Yes, dividends per share were down 6.3%, but profit is headline earnings per share up 13%. So it's well positioned, especially if people continue to have some financial stress or people continue to downsize or relocate, they'll move some of their stuff into those storages.
All right. Well, where are you storing your money today, Makwe? Your stock pick?
Pan-African Resources, the guys have managed to increase production by 32% in 6 months. The guys managed to reduce their debt by 32%. And at these high gold prices, most probably they will end up being debt-free by full year 2026. You look into their cost increase by mere 3.3%. Yes, one can argue that their PE is kind of demanding at 20 and not a decent dividend yield at 1.9. But the minute they reduce all that debt, then probably they'll have to reward us as shareholders going forward.
All right. Well, thank you so much for your time and for your insights there, Makwe, on what has moved investors' money today. That was Makwe Masilela from Makwe Fund Managers.